You ever wonder what the world's most successful investors are doing with their money, like right now? Well, we've gone through all their latest filings to give you a front row seat. Think of it as a masterclass, a deep dive into the portfolios of the absolute titans shaping our markets. Okay, let's jump right in. First, we're going to look at the one huge idea that's got everyone's attention. Then we'll unpack the brilliant timing behind their trades. After that, we'll uncover some hidden gems you might not expect. We'll also look at a stunning countermove from an absolute legend. And finally, we'll boil it all down into some key lessons we can all learn from. All right, first up, the big one, the trend you just can't ignore. When this many legendary investors all agree on something, you really have to pay attention. And right now, their money is screaming one thing: artificial intelligence. So, seriously, if you had billions of dollars to invest, where would you put it? Well, the filings give us a shockingly clear answer. It's a massive, super concentrated bet on the future of technology. Now just look at the sheer overlap on this chart. It's incredible. Amazon is the most widely held stock among these titans. But then look at the key backers. You see the same legendary names, Tepper, Dalio, Gerstner, popping up again and again, piling into Alphabet and NVIDIA. This isn't just some casual trend, folks. This is a powerful shared conviction. And we're not talking about small, speculative plays here. I mean, David Tepper is heavily invested in AI stocks. Brad Gerstner has doubled down. Ray Dalio just upped his NVIDIA stake by 54%. They really believe these platforms are the essential building blocks for the next decade of growth. But here's the thing. Just buying the big names isn't the whole story. Not even close. The real genius, the art of it, is often in the timing. So let's move on and see how these masters use market psychology to get exactly the price they want. This quote from Bill Ackman's fund, Pershing Square, it just says it all. They don't just buy great companies. They buy them when the market is telling the wrong story. When everyone else is panicking, that's their opportunity. Take Google, for example. Back in March 2023, the story on the street was that ChatGPT was going to absolutely destroy Google search. The stock was literally being called an AI loser. And that's exactly when Pershing jumped in. They bought shares at just 16 times its expected future earnings. To put it simply, they got a world-class company on sale at a massive discount to what it's worth today. And they did the exact same thing with Amazon. In April of last year, the market totally freaked out over some new tariff announcements, and the stock took a dive. Pershing saw that chaos not as a risk, but as a golden opportunity to buy one of the world's best businesses at a historically low price, a price that reflected fear, not the actual fundamentals. And this is a brilliant illustration of their whole strategy with Uber. While everyone else was getting lost in the weeds, obsessing over these misguided concerns about self-driving cars, Pershing was focused on the numbers. And what did the numbers say? An incredible 30+% growth in earnings per share. They bought the numbers, not the noise. So here's a crucial point. It's not just about the big, famous tech stocks. The really smart investors are also looking one layer deeper. They're looking at the companies that will build, power, and expand this whole AI ecosystem, often in places the rest of the market is completely ignoring. For instance, you see here, Pershing is betting on Brookfield. They're the kind of company that's poised to cash in on the massive infrastructure build-out AI needs. We're talking data centers, power grids, the whole shebang. Then you look over in Asia, and Singapore's Temasek Fund has nearly tripled its stake in the Chinese e-commerce giant PDD. That is a huge vote of confidence. And finally, you've got David Tepper making a high-conviction bet on Alibaba, which kind of signals that he believes those beaten-down Chinese tech stocks may have finally hit rock bottom. But what if this overwhelming consensus is actually a warning sign? I mean, there is one investor, maybe the greatest of all time, who's making a really dramatic move in the complete opposite direction. So while pretty much every titan we've looked at is leaning hard into AI and big tech, Warren Buffett is actively pivoting away. And his latest moves are just a stark, stunning contrast to what everyone else is doing. In a move that honestly made a lot of jaws drop, Berkshire Hathaway, led by Buffett, recently slashed its stake in Amazon, a huge favorite we just saw on the other charts, by an incredible 77%. And as you can see here, it wasn't just Amazon. He also kept trimming his legendary position in Apple and cut his Bank of America holdings. So where is all that money going? Into a brand new position, the New York Times. I mean, this is such a classic Buffett move, isn't it? He's investing in a business with a brand that's basically irreplaceable, a strong subscription model that acts like a protective moat, and a super loyal customer base, even if it's in a less glamorous, Old media industry. He's betting on enduring value over high-flying tech. So, we have this powerful consensus on one side and a legendary contrarian on the other. What are we supposed to take away from all this? Well, it's that successful investing is really less about predicting the future and a lot more about sticking to timeless principles. Okay, let's boil it down. First, spot the dominant trend. The AI wave is just undeniable. Second, seize the narrative. Use the market's fear to your advantage. Third, know your price. Be disciplined and wait for that volatility to create an opportunity for you. And finally, number 4, trust your own thesis. Real conviction, as Warren Buffett shows us, sometimes means you have to stand completely alone.
At the end of the day, these titans aren't just buying stocks. They're buying their vision of the future. And yeah, their strategies might be different, but they're all built on deep research and just unwavering conviction. So the only real question left is, what's yours? Thanks for watching.